Here we have the current stock market update for GameStop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So as we can see here, we are trading at somewhat upper levels, heightened levels, you could say, in GameStop into the close of the week last week. And in this video, we will be looking at some important support and resistance zones, some important price levels, so that hopefully traders can identify some profitable investment strategies for this stock going forward. So as we can see here, this near-term resistance high, the price high that was posted most recently, comes in right around 23.10. This does break the prior resistance zone, which was seen at 22.80. So we can actually start to redraw these Fibonacci retracement analysis studies to give us some slightly different viewpoints about how to assess potential support zones for this stock. So currently what we're dealing with here is a trend wave movement that is moving in the upper direction. This is a positive here, but there are some conflicting viewpoints for how to sort of assess this most recent price activity that has been moving in the sideways direction. So roughly this type of activity here. So, there are really two perspectives here. One would be that we did see a very strong price movement to the top side here. Share prices did manage to rally into these, $23 area roughly. And then, you can make the argument here that share prices are in the midst of a sort of a sideways consolidation period, sort of basing for another run higher is one argument that could be made here. However, the alternative viewpoint here would be that we're starting to sort of roll over out of these upper levels here. That would be sort of the worst case scenario if we were to see something like that. So essentially what I'm saying is we can see that there's a slope here in share prices. We're sort of curving over and sort of rolling over here. Then the possible downside direction would start to unfold at that point. So the real question here is, how do we know which one it is? How do we know which side is most likely at this point? Are we likely to see share prices move higher from here, or are we sort of rolling over here from a resistance zone? Well, one area that I would be watching here does come in. It has sort of moved up here. Right to the 2190 area. Previously, we were looking at more of a 2150 potential support zone, but at the moment, I would really be looking at 2190 as the potential level here to be watching, because as we can see, if we sort of drill into the price chart, we can see that this was an area that was retested previously. We did see a bit of a bounce here, and this is actually where we were able to make this new price high. So that would be this area here. We were able to bounce right off of roughly right around 2188. So we can call this 2190. And then we did see this break to 2123, which was significant because it did break above that prior high. So essentially it did break through resistance zones there. So this is a very important level here, because if we see this level tested again, the expectation would be that we would need to see a bounce here. If that does not occur, what could start to happen is, if we did start to see share prices decline here, the risk would be that share prices really move below not only that historical support zone, but also these exponential moving averages. Because as we can see here, it's a little bit difficult to see actually, because there's so much going on in this area, but that's why it's important. What we can also see here is that there is also this orange line here, a horizontal zone. This is the 38.2% Fibonacci retracement area. So currently this comes in just below, right around 2170, 2172, right around there. And as we can see, there are also several major exponential moving averages there as well. This is the hourly time frame, so these are very important moving averages. The blue line is the 200-hour exponential moving average. The orange line is the 50-hour, and the purple line would be the 100-hour. And as we can see, they're all forming right around this same area here, also in line with that 38.2% Fibonacci retracement zone, which is this orange kind of zone here. So there's a lot going on right around this area here. So from roughly 2190 to 21, I would call it 72, right around there. you do have a very important level of support. So, and it's kind of a layer of support. It's kind of a support zone, really. So if you do see share prices move through there, that would be the worst case scenario. That would then suggest that share prices have probably reached the top here. And that we are ready to start to see probably a retest of roughly 2085. These levels have now changed because we did see a slight break of prior resistance levels. So previously it was around 2280. Now it's around 2310. So this does give us some slight differences in the potential support zones or levels that we were watching previously. So key here to the downside is this 2170 to 2190 area. If we do break below there, then I think you're looking at 2085. And if that area can't hold, I mean, at the very least, I think you're looking at a retest of that $20 psychological handle. But if we do manage to find support here and maybe find a foothold, that would be a positive sign, because that is when you can start to expect share prices to start to make new highs. That really is going to be important here because there's been a tremendous amount of downside here recently. We can just sort of pull out on this price chart here just to close out the video here, and we can see that there has been a lot of downside activity here, including price gaps to the downside. And things like that. So, there has been some reason here to be concerned. And what you really need to see here is a continual trend where the share price is able to continue making new highs. You want that to continue. And you also do not want to see this 2190 to 2175 roughly zone to start to break. From here to the top side, I mean, you really do have to look right back at that psychological level at 2501. I mean, it's really hard to get around that. I don't really like to look at psychological levels. Usually they're not very important. They can have importance, but here would be an exception because we have a major resistance zone right there. And this is also a stock that is very much prone to options trading, and you will see a lot of options defense right around psychological numbers, $20, $25. So that type of scenario is probably going to be more important for GameStop than it would be for your average stock. So here's the current stock market outlook for this stock. Currently, I am looking for a possible retest to the top side of $25, but then to the downside, you really need to keep an eye on 2190. So here's the current stock market update for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.